Hey everybody, welcome back. I'm Caden, this is Stephanie, and this is Real Talk Real Estate. Today's episode, we're starting a brand new series where we are interviewing professionals around the industry like ourselves. So today we have Brenda Henkel with Advanced Mortgage. Brenda, thank you for joining us.
Thank you for having me.
Of course, yeah. No, we're happy to have you to kick this off. And yeah, so this is kind of a new series we're starting where we're going to just go throughout the different industries and bring on professionals like Brenda that can give us different insights into the market, mortgages, all that good stuff. She's got the smart brains for mortgages.
Been around doing it a long time.
So some of the questions that we have for Brenda here today, we're kind of just going to go back and forth, taking turns asking them. Brenda's going to give us her answers, and we will go from there. If we have any questions or if we have any other questions to follow up with, we'll kind of just go with the flow.
Sounds good.
Oh, I get to start it off.
Yeah.
Okay, Brenda.
Ladies first.
Wow, bring your kid to work day. I just made that joke before the camera started.
We found him out there somewhere.
Scooped me up. Okay, Brenda, what is the biggest mistake that buyers make before they ever speak with a mortgage broker?
You know, Caden, I think the biggest mistake people make that I see all the time is going to your bank and stopping there. Nothing wrong necessarily with your bank, and I actually don't even like people telling me it's their bank. I like it's the bank you deal with. Right? You're only getting whatever product they have to sell. You're only getting the experience of that person at the bank that also sells other products, right? But I would say the biggest one definitely is you're only getting one product. You're stopping there. Did you get a positive or did you get a negative? We sometimes have clients come in that have been to their bank and been declined and think that's it and stopped.
Yeah.
Not all lenders are alike, and a lot of people don't know that. Lenders are different products, different opinions, different policies. Absolutely.
That was a really good answer.
Thank you.
Very good. That's a good start.
That is a great start.
We're on a roll, guys.
Brenda, in today's market, what does a strong pre-approval actually look like?
Stephanie, the best thing I can say is, and definitely the way I work with it, and I think it brings some pretty positive results, is getting the actual source documents. Most people, and surprisingly enough, don't necessarily know what their income is or don't know what their qualified income is. You can be an hourly employee, you could be a salary employee, and that, you know, that's the easy way of looking at income in a good way. But what if you're self-employed? What if you're a contract employee? You don't know that. That's a whole different story on how that income is calculated. So getting the paperwork, if you tell me you're a salary employee, I want to see your pay stubs and your T4s. If you tell me you're self-employed, I'm asking for other paperwork, but I'm asking for the paperwork. If you're not bringing in paper, it's more of a pre-qualifying. You can go online, and every bank, I think, has that you know, form or that you can fill out. Never go with that. You know, no.
I feel like everyone would over-exaggerate on those too.
Absolutely.
I mean, okay, I make $57,000 a year. Let's call it 65.
Yes.
Like, you know, you kind of bump up. Yeah.
Yes,
same with
exactly. And the other part to it is factoring in debts.
Yes.
A lot of people don't even know necessarily what they're paying for a loan. They could be paying, they think it's $250, but it's actually $250 biweekly, not $250 a month. And not semi-monthly. So they'll times it by 2, and that's still not the right number. What are you showing on your bureau, right? Do you have a bureau credit that's I'm going to say good enough, but high enough that you can actually qualify? You need to look at that in lots of cases. And you need to look at the whole picture, look at the source of it.
Very good.
Very good.
So I heard you talking about self-employed people. We don't have this on our page, I don't think, but how is that looking now for self-employed people to qualify for mortgages?
I think it's got a little bit better. We went through a stage where with self-employed, you needed to be self-employed in the same work for 3 years, and you needed to supply, you know, all your T4s and your T1 generals. And if you're incorporated, your T5s and your company financials, and you still need to do that to a degree, but banks are looking at it maybe by helping to add on some of those, you know, the income, cutting back some of the expenses that may not be involved in the work that you're doing, right?
Okay. Yeah.
So, and not all lenders are good at it, but again, mortgage broker, I'm able to go to a lot of lenders that are going to have, you know, necessarily a different way of looking at things. So in adding back in, you know, maybe on your tax return, you'll see a certain number, because self-employed people, they're looking at net income, not gross. Employees, you're looking at gross income.
Yeah.
So there's a big difference.
Yeah.
Gotcha.
And there's a difference between, are you incorporated or you're a sole proprietor? What documents are?
Yeah.
I mean, we're getting all involved here, but that's a good question to ask, because lots of people don't know.
Yeah. If whether they qualify if they're self-employed and what that looks like.
Exactly. And that goes back to the pre-approval on what's a good pre-approval. What makes a good pre-approval.
Yeah.
And seeing those and knowing and having the experience to know the difference between the two.
Yeah.
Very good.
Good. Awesome. Yeah. Okay. We got a myth buster here.
You're going to throw in a question that I have no idea what the answer is.
And it's not even going to be mortgage related.
Well, I can help out with that one.
Okay. What is one common myth about mortgages that you wish would disappear?
The common myth about mortgages, I got to remember which way I answered that before. I think, sorry guys, you're going to have a look.
That's okay.
Because I have some, that you're going to get a better rate at your bank again, or also that going to your bank is the only place you can go.
Yeah. Yeah.
Right? Instead of being able to, why would I go to a mortgage broker? People still like brands, what they consider brand name. TD, any of the big five.
Yeah.
What they don't know is a lot of the trust companies are actually owned partially by one of the big five, and they're also under the Bank Act, the same as all the banks are.
Yeah. Yeah.
So I think that's the biggest myth, that, you know, they feel more trusting of going into a bank and a bricks and mortar they can walk into. And, you know, I could name off some trust companies that you're going to go, who on earth are you guys, right?
Yeah.
They have a name that, you know, is 3 letters.
Yeah.
What is that? But it doesn't have to be a brand anymore. And then people are getting better at it.
Oh,
right?
100%.
But I think that's the biggest myth, is thinking you need to go to
That you have to go to your bank.
Yeah.
Or a bank.
a bank. Yes.
So kind of piggybacking off of that again, you know, going to mortgage brokers it's the better, and I don't want to say right decision, but it is the better decision.
Yes.
How many different lenders do you have access to?
I probably have access to 20,
Okay.
That's good.
but I won't use 20 because some of them I don't need to use 20.
Yeah.
If you've developed a relationship with, say, 5 of those or 6 of those, and they're offering the same as what I look and see what the other ones are offering, they'll stay there typically. Because when you build a relationship, you're going to get, you know, that process at the steps of getting the mortgage. You're going to get it easier, smoother, because they know who. Yes. And knowing the product.
Yeah.
Right. Helps not only me, but helps the client so that I can express what it is.
Well, and I think that would help build the trust amongst your client as well. If you refer them to a lender and you say, I've done so-and-so deals with them, they're good, I know this person by name.
Yeah.
I think that would help with the stigmatism around banks being more trusting. If you are involved with the people that you're working with and doing deals with, then that makes you that much more trusting.
Yeah,
Absolutely.
definitely. Yeah.
Because it is trusting. A lot of brokers maybe don't have an office. They're working out of their home. So you have no idea, well, where are you? Who are you? Most brokers will have maybe a major brokerage that they're working with. But still, I could name off all the big brokerages across Canada.
Yeah.
And you probably don't know, and saying, okay, well, that's fine. I don't know who you are. It's the relationship, and you're right in saying, Stephanie, it's the relationship building for that lender, but also for the client that's coming in to see you for you.
Yes.
Right?
Yeah.
The same as you guys do as realtors, right? It's the relationship you build.
Yeah,
There's more
definitely.
credibility.
Yes, absolutely. Especially in this world of virtual.
Oh, goodness, yes.
Brenda, how early should someone realistically start preparing if they want to buy a home?
As soon as they start thinking about it.
Oh,
I like it.
I don't think there's a time where you can go, well, you know what, I don't think I have my down payment saved yet, so I'm
Yeah.
going to wait till I have it all.
Yeah.
Well, you could get to the down payment saved and come in and all of a sudden there's something about your income that wasn't right or your credit.
Yeah.
Because I can go through also the credit bureau
Mhm.
and I've got a pretty good handle on
Yeah.
how to help you out with whether the credit needs to be
Yeah.
looked at. And I think that probably can be the big one is
Okay.
the credit.
Yeah.
What have I got? What do I need to look at? What do I need to do to change it?
Mhm.
And we can go through all of that.
Yeah.
But yes, as soon as you start thinking about it, come in and find out am I ready?
Mhm.
What does it look like now? What will it look like when the time's right?
Yeah.
And what do I
Yeah.
need to do to get there?
Yeah, I agree with you on that. I think it is really smart to talk to your mortgage broker right when you start thinking about it. Like Brenda said, you don't know it. You don't even know what your down payment would be, depending on
Yeah.
Absolutely.
what you qualify for. So, you,
Mhm.
like you said, you could be saving and then come in and find out that something's not lining up, and then you have to wait another 6 months or
Yes.
before
Yes.
you can qualify again. So, I think that's good. Right when you think about it.
Right when you think about it, yes.
Mhm.
And how long pre-approvals? They good for 3 months?
The pre-approval can be good for as long, I'm going to say forever.
Yeah. Yeah.
The thing that changes a pre-approval is anything that changes in your life.
Yeah.
Would that be income? Would that be credit? Would that the amount of debt you took on?
Yeah.
Banks don't really do pre-approval as far as rate holds anymore.
Oh,
And if
okay.
they're doing that, they're doing it with a higher rate than what the
Oh,
discount rate
yeah,
is.
yeah.
So when a client comes in to see me, I'll make sure they know that this pre-approval is as good until something in your world changes.
Okay. Yeah.
That's
Yeah.
good to know because I always thought that it was between 3 to 6 months that it could still be valid.
And it used to be that way, Stephanie, absolutely,
Okay.
where banks
Yeah.
were doing rate holds.
Yeah.
But now they'll still do them, but I recommend not
Yeah.
getting one because once you've got that rate hold at a number, it's going to be higher than your discount. And
Yeah.
you're not going to drop that rate.
Yeah.
Yeah.
Exactly. Yeah.
That makes sense.
Okay. Here's another good one. What impacts a buyer's interest rate the most that people don't realize?
What? Say that again, Caden, sorry?
What impacts a buyer's interest rate the most that people don't often realize?
Credit.
Yeah.
Yes, because if your credit is at there's certain levels of where your credit score is,
Mhm.
that if you qualify with the bank, you qualify with the bank, and they're going to give you the same rate.
Mhm.
But when you get to a certain threshold, let's say at the lower end of the threshold,
Mhm.
banks aren't going to look at you. Now you're
Yeah.
going into a different level of lending,
Mhm.
being the B lenders. Now you're looking at a higher interest rate.
Yeah.
And then you can keep on going down to private. But I would say the biggest one that affects the interest rate, and the only one I can think about, is credit.
Now, when looking at that credit's the biggest impact there. Is it something within that whole credit history payments?
Yes.
If you miss payments,
Yep.
do they just look at the score, or is it such a big, is there one big piece of your credit that they look at more?
They'll look at the score first.
Yeah.
So if your score isn't within a certain range, it's below that, they're going to say, no, not even going to touch it.
Yeah.
Without even looking.
Mm-hmm.
But if your score is within the range that they're going to look at,
Yeah.
now they're starting to go through the details of what, made up that score.
Yeah.
Because lots of things can make up the score.
Yeah.
You could have perfect payback,
Mm-hmm.
but your utilization of your credit is super high.
Mhm.
It's going to knock that score down
Yeah.
tremendously.
Yeah.
So they're looking at that, but the score number one first.
Okay. Yeah. Yeah. Fair enough.
Good. So what would you say is what is the, I guess, minimum score where they would not even look at it?
Minimum score to get a mortgage would be 600.
600.
Now, scores are rated from about 3 to 900. Anything under 3 is called a reject. And it's not
Okay. Yeah.
that's not a nice word we like to use. But anywhere from 3 to 9. I always tell everyone if you're at 900, you got to be God to get there. So,
Yeah.
but 600. Anything below that, they're not even going to look at.
Okay. That's good to know.
You get into a B lender and they're not worried about that.
Yeah.
Okay. Good.
Have you ever seen a 900?
Yes.
How many?
In 30 years of doing this, probably on 2 hands, maybe 10 times.
Wow.
Really?
Wow.
Yes.
Huh.
And they're typically older people,
Mm-hmm.
someone who's had credit a long time,
Yeah.
but the same credit. So I'll always tell clients that if you're let's say you've got a credit card that you've had for 20 years.
Yeah.
And then you've got a new credit card. Maybe that new credit card's offering you better benefits. They'll say, well, I think I'll get rid of the old one. And I'll go, no, don't do that.
Yes.
Because that is the credit bureau is looking at
Your credit
the
history.
credit history,
Yeah.
length of time. So I would say older people that have at least a couple of creditors on their credit bureau and the utilization is low and they've had it for a long time.
Okay. Yeah.
Huh, good to know.
Yeah.
Fixed versus variable rates can feel overwhelming. How should buyers actually think about this decision?
I feel that, first of all, look at what your financial situation is. If you've got a financial situation where you're, on a set income, then you might be thinking more that you want to have a set interest rate as well, so that the payment is the same. If you're in a position where maybe you've got the ability to withstand or be able to rises and lowering of the interest rate, then maybe think about that as well. But I will always go through and show them the differences in payment amounts related to increases in the score. And also the last thing I'll say to them, if you can put your head down on the pillow at night and sleep, not worrying about, hey, my payment could change, then you probably got an idea that you're okay with doing
Yeah.
that.
Yeah.
But if you can't, then I can tell you all the things in the world about the best, let's go variable.
Yeah.
But if you can't get past that, then, I don't think it's worth it.
Yeah.
Yep. Yep.
That's a good answer.
Okay. And if someone's looking to buy this year, what's one thing? I mean, we're only in January. What's one thing they can do to start working on and improving their borrowing power?
Checking the credit
Yeah.
to see what your debts are.
Okay. Yeah.
So if you've got, let's say a large amount owing on a credit card or a line of credit, or you've got a loan that maybe is close to, being finished with, or, that your payments are almost there with.
Yeah.
But I would say number one is look at your debt load.
Okay. Yeah.
Right. And where, some people will look at it, have you got a potential of an increase in your job?
Yeah.
Is there any risk in your job? But mostly, look at your credit.
Yeah. Yeah.
Good. How does being self-employed change the mortgage qualification process? We kind of already asked this one.
Yeah.
And you said mostly it's just the paperwork now.
Exactly. And, qualifying is still the same. Lenders are always going to look at, can you pay it back?
Yeah.
You get clients all the time saying, well, I just gave 35% down payment. Why are they worried about that? I've got all the equity sitting in the property. Why would I walk away from it? Or if I did, the bank could take my property. The bank doesn't want the property.
Yeah.
Right? They want you to be able to qualify for it.
Yeah.
So as far as self-employed, the difference definitely is paperwork, like you said, Stephanie, and that they're looking at a different part of your income. Right? They're not looking at your gross income. You could be making 200,000 gross income, excuse me, but only, the net is 100,000.
Yeah.
It's the 100,000 they're going to look at.
Right. Okay.
Okay. And once a buyer has a property under contract, what surprises them the most on the financing part of it? Like if a brand new, they just wrote an offer on their first house and now it's up to the financing. What surprises them?
I think still that they still have a lot of paperwork. A lot of people, we need to let them know. This is, if you came in for a pre-approval, you got a pre-approval.
Yeah.
You didn't get the approval for the property connected to you.
Yeah.
The bank needs to look at that. And so if you're less than 20% down, of course, so does the lender. Or sorry, the default insurer. So I think they think that by the time they've come in, or some do, unless you've explained it to them, they've come in and are surprised that you still need all this paperwork.
Yeah.
There's still all of these steps to go through. And I think, the biggest one that I run across is the amount of paperwork. And probably the bigger one of that paperwork is proving down payment. That they have to show their bank's accounts, right? I'm sorry, you've got to show your bank account. You can't black out all the things that you don't think I want to see.
Every second line.
Exactly. Yep. Or I absolutely need your name on the on the bank statement, please.
That is good to know, though, because I've never thought about it that way. The pre-approval is just a pre-approval.
Mhm.
That's not
Absolutely.
the approval itself.
Yeah.
Yes.
Yeah.
The chances of you getting, if you've got the let's call it proper pre-approval,
Mhm.
the chances of you getting through a full approval are pretty high.
Yeah.
But there's never, you never know when you actually get to the final stages, right? I even have issues where an employee letter is written up in such a way, and the lender calls the employer, and the employer says something entirely different than what was ever written on the letter. So you just don't know.
Yeah.
that would suck.
Yeah, it has happened. It has happened. And I think that you just got to be aware of those things
Yeah.
could be there.
Yeah.
Mhm.
Yeah.
Good. I think we're on our last
I
question
think
now.
so. Yeah.
Is it a hard one?
Yeah. Always.
Okay. In your opinion, Brenda, what separates a great mortgage broker from one who's just average, apart from not being you?
There's no average in my world at all. I'd like to think experience for one thing for sure, but you can have lots of experience and not. I think you need to have that, put your heart into it. Because if you put your heart into it, you're going to have all of those other things are going to come along.
Yeah.
Great communication. If a client calls and needs a question answered, answer them.
Yeah.
And don't wait 2 days to answer them. They really want you to answer them, right?
Yeah. Yeah.
Having that. And if I don't know the answer to the question, looking it up, finding it out. Treating your work not just as a job. It's a career, but it's also an extremely rewarding career. You're
Yeah.
dealing with people. You're dealing with their lives.
Yeah.
So treat them that way. I can have all the experience in the world, but if I'm not, with my clients
Yeah.
through the steps, and not just the steps to get to the mortgage, to get to the possession,
Yeah.
but the steps after that.
Yeah.
I think those will help you, and the rest will just flow.
Yeah.
Right.
I think that's really good.
Good. Yeah, you
That was
do
it.
have that personal connection with your clients, though. I've actually sent Brenda a couple, and they both, they've had great things to say about you.
Oh, thank
They
you,
thought that
Stephanie.
you were amazing.
Thank you.
Good. Well, I think that wraps it up.
Yeah.
Thank you for tuning in to today's episode of Real Talk Real Estate. Again, my name is Stephanie. This is Kaden, and this is Brenda Henkel with Advanced Mortgage. And don't forget to like, comment, subscribe, and we will see you in the next one.
See you guys.
Bye for now.
That was good!
That
You
was
did it!
awesome.
Phenomenal!
Put her there.
You did really, really good!
Thank you. That
Oh
was
my gosh, you're built for the camera.